Hello everyone, I'm happy to see you here once again. The educational series has provided an informative and useful video about whole life insurance. Here, we will try to cover all about whole life insurance, including what is whole life insurance, advantages of having a whole life policy, types of whole life insurance policies, how does whole life insurance work, is whole life insurance the best option for you, factors that influence the cost of whole life insurance, choosing the beneficiaries of a whole life insurance policy, and much more. For your kind information, this series has been made only for educational purpose. For any doubt, you can use the comment section. We will try our best. Let's get right to the topic without wasting any time. Basics of whole life insurance. Whole life insurance is a sort of permanent life insurance that can offer coverage for a person's whole lifespan. This type of life insurance offers a number of guarantees, which might be appealing to someone who does not want to be left in the dark after purchasing life insurance. Combined with an insurance product, whole life insurance includes an investment account, referred to as cash value. As long as you continue to pay your premiums, your beneficiaries will be able to collect the death benefit from your insurance policy after you die away. There are three types of guarantees offered by whole life insurance. 1. A death benefit that is guaranteed to remain constant. 2. The assurance that your premium payments will not increase. 3. There is a minimum rate of return on the cash value that is guaranteed. What are the advantages of having a whole life policy? 1. Lifetime protection against all dangers. When a term life insurance policy expires, your coverage comes to an end. If you choose to let your policy lapse, you will be faced with the decision of whether to purchase a new policy depending on your current age and health state. For example, if you purchased a 20-year term policy when you were 30 years old and are now 50 years old, your term policy will expire. However, if you decide to purchase another life insurance policy, the premium will be calculated using new rates, which may be higher. One of the most significant advantages of whole life insurance is that it is considered a permanent life insurance policy. It is intended to give you with a lifetime of coverage protection with premiums that will not increase over time, will not expire after a particular number of years, and will not be revoked due to bad health or disability. However, in order to keep the policy in place, it is necessary to make all needed premium payments on schedule. 2. Cash value. Having a cash value component to your whole life insurance policy can be a significant advantage over time, and it is one of the most significant advantages of owning a whole life insurance policy. When you have a whole life insurance policy, it is feasible to borrow against some of the cash value in your policy to meet any financial obligations you may have. It's crucial to remember that, in the event of your untimely death, any outstanding loan balance on your whole life policy may be deducted from the death benefit received. While you are alive, interest is accrued on any outstanding loan sums on your insurance. 3. The ability to be adaptable. Another advantage of whole life insurance is its capacity to provide you with a certain amount of flexibility. Because it has the potential to accrue a monetary worth over time, you have the flexibility to spend the money for a variety of purposes. Additionally, you may choose to simply leave it alone, with the chance of raising the cash value of your insurance with the passage of time. What are the many types of whole life insurance policies available? Variations on the conventional policy may include alternative investment possibilities, payment schedules, or be tailored to meet the needs of specific individuals or groups. Whole life insurance is available in a variety of forms, including 1. Whole life insurance with a single premium. 2. Whole life insurance for children. 3. Indexed whole life insurance is another option. 4. Variable whole life insurance is another option. 5. Joint life insurance. 6. Reduced paid-up whole life insurance. 7. Guaranteed issue whole life insurance. 8. Modified whole life insurance. 9. Whole life insurance with a limited payment. 10. Simplified issue whole life insurance. How does whole life insurance work? Whole life insurance is a versatile, tax-advantaged financial solution that can assist you in achieving a variety of financial objectives during your whole lifespan. The following is an explanation of how whole life insurance works. Your insurance coverage is never going to expire. Whole life insurance does not have a term, instead, it provides coverage for the rest of your life. It makes no difference when you die as long as you continue to pay your premiums. Your death benefit is guaranteed for life and is normally tax-free. Your insurance premiums remain the same. When you purchase whole life insurance, your premiums will remain the same until you have paid off your policy, which can occur when you reach a specific age or after a specified number of years. When you have finished paying your premiums on a whole life insurance policy, your coverage will remain in effect and you will have no more obligations. It's similar to paying off a mortgage in full. One thing to keep in mind about premiums is that some whole life insurance policies include a component of term insurance. If your policy includes blended term insurance, there is a possibility that more premiums will be necessary in the future if the dividend scale of the company experiences a significant decline. You will amass monetary value over time. As a consequence of the accumulation of cash value, which is guaranteed to grow over time and is not related to the market, your policy's cash value will not diminish as a result of a decline in stock prices. Furthermore, if you choose to utilize your profits to purchase further paid-up insurance, your accumulated cash value and death benefit will grow even faster, compounding over time, increasing your overall wealth. If you need money for any reason, you can access the cash value at any time, and you'll normally be able to get your hands on it within a few days. Several methods are available to you when it comes to accessing your monetary value. A loan secured by your insurance coverage. You may be able to obtain a loan from your insurance company against your coverage. The loan's repayment terms are adjustable, but interest will accrue during the loan's term. You will have your death benefit reduced by the amount of the loan if you die while the policy is still in default. Another alternative is to use your insurance policy as collateral for a loan from your bank or financial institution. The majority of the time, this is an excellent option in an emergency situation or for larger, more rare demands, like as upgrading a home. Give up a chunk of your insurance policy. As soon as you surrender your coverage, you will no longer be covered under your insurance policy. In many circumstances, when consumers need to access their cash value but no longer require the whole death benefit, they surrender a portion of their policy in exchange for the cash. In this way, you can keep a portion of your life insurance death benefit in place. Additionally, from a taxation standpoint, this can be beneficial as well. This is due to the fact that when you surrender a policy, you will be liable for ordinary income tax on any cash value that exceeds the basis in the policy that you paid into. Give up control of your entire policy. The cash value in your policy can be withdrawn at any time, but you must also relinquish all of your life insurance coverage in this situation. If the cash value of your property exceeds the base in which you invested, you will be liable for ordinary income tax on the difference. If you're considering about taking advantage of your cash worth, your financial representative can assist you in determining the best course of action for your particular case. Take note that it takes time for the cash value of your insurance to rise, so using it in the first few years is not recommended in most cases. If you become disabled, your insurance provider may be able to reimburse you for your premiums. If you have the optional waiver of premium benefit on your insurance, the firm will pay your premiums if you become disabled at any point in the future. During this period, your cash value will continue to grow, and you will not be responsible for any payments on your policy. A health checkup may not be required to acquire additional insurance coverage. It is possible to add more insurance to your policy when you reach certain ages, 22, 25, 28, 31, 34, 37, and 40, if your policy includes the optional additional purchase benefit. You will not be required to undergo a medical exam to do so if your policy includes the optional additional purchase benefit. That means that changes in your health will have no impact on your ability to obtain additional insurance. Consider the following: is whole life insurance the best option for you? Here are some questions to ask yourself and some alternatives to consider when deciding whether or not whole life insurance is correct for you. Do you require a cash value life insurance policy? Do you require life insurance coverage for a period of more than 30 years? Do you require a payout when you die, or do you require a payout only after both you and your spouse have died? Do you desire more flexibility in terms of payments or the quantity of money you receive? Factors that influence the cost of whole life insurance include the level of coverage you select, as well as the following factors will influence your rate: age, gender, dimensions, height and weight, history of criminal activity, hobbies and activities that are potentially dangerous, health conditions in the past and present, your family's medical history, including those of your parents and siblings, consumption of nicotine with marijuana, including use of nicotine patches and gum, abuse of drugs and alcohol, credit. Driving record is an important factor in determining. For whole life insurance, there are a range of different features and provisions that can have an impact on costs, including the following. The payment term is as follows. You can select to pay for the full insurance in a short period of time, such as 10 or 20 years, if you like. Because of the front-loading of payments, the premium would be significantly higher. Return rate that is guaranteed. The guaranteed return offered by some companies is higher than others, which can result in higher annual premiums for some customers. Crediting of dividends. Many whole life insurance policies pay out a dividend, and policyholders have the option of choosing how they want to receive it. When you receive your dividend payments in the form of a credit toward premiums, you lower your annual out-of-pocket expenses. Choosing the beneficiaries of a whole life insurance policy. When you purchase a life insurance policy, you will designate a beneficiary who will receive the death benefit if you die. You are not required to divide the dividend among beneficiaries in an equal proportion. If you want to select a proportion for each, for example, 80% for one and 20% for another, you can. It is also a good idea to name one or more contingent beneficiaries in addition to the primary beneficiaries. These individuals serve as a backup plan in the event that all of your principal beneficiaries are deceased at the time of your death. Maintaining your beneficiary designations and ensuring that they are up to date with your current intentions is a critical chore. Regardless of what your will says, the life insurance company is contractually bound to pay the beneficiaries listed on the policy. It's a good idea to double-check your beneficiaries once a year to make sure they still match your preferences. Finally, in this whole series, we discussed about whole life insurance, including what is whole life insurance, advantages of having a whole life policy, types of whole life insurance policies, how does whole life insurance work, is whole life insurance the best option for you, factors that influence the cost of whole life insurance, choosing the beneficiaries of a whole life insurance policy, and much more. Hope you understand and found this series more informative and useful. Thanks for joining us. Hope you have a beautiful day.